Hello, trading is closed on December 18th, 2019. Let's go over our calls. Look for the pattern with the early low. This is it. Tomorrow has an early high. Had a target of 31.9705. That one printed, and resistance over it. So the commonest thing was to gap and trade outside yesterday's range. We did that. We gapped. This is a quarter of a point higher than this. And lastly, the next most common thing was to close little change, 4 points or less, and we did that as well. Now I had a time target of 13 December. That was here. If we don't go higher than this, then really within a day or so, that still works, and I'm not willing to give up on it. Once we take this out, then my idea fails, but let's give it more of a chance. Right now we've gapped up 3 days straight. Nothing to show for it. Anyone who bought stock at any of these highs is now in the red, despite gapping up 3 days. It can be a sign of churning at the top. We just need confirmation by getting follow through on the downside. And usually after yesterday's pattern, we get more downside than we've seen. During the day, we had an ultimate buy signal here. We did trade higher. MEJT said all these little squiggles would retrace to between those white lines, and they did. Now, if you look at the daily chart, right by the demarked cell, we have a bar completely over the band, followed shortly thereafter by a bar completely under it. It doesn't preclude trading slightly higher, but often it's a sign of exhaustion of the move. Still need confirmation, which we don't have yet. Confirmation has taken out some prior lows. We still think we're in wave 3 up. We banged on this number of times. Eventually we'll go higher. But a friend of mine pointed out this blue trend line, which I had missed. So we are meeting resistance right at a significant trend line. Well, it's possible still to interpret this as a rising wedge, a breakout, to return to the apex, just about. And if you're a bull, you really need to invalidate this interpretation by taking out some of these highs, because otherwise you can count this as 5 waves up, and that spells trouble. So you have to invalidate that count. Hasn't happened yet. Well, here's what I have. Thursday's pattern has the early high. Typically it's a rally day with a high near the close. If it fails, it's a straight line drop. Once again, mixed signals with these standard rules. The most positive thing about today's trade is the wall into the close and the hops and close at the low of day. They often indicate people willing to sell at any price. They're often followed by gapping up, which ideally what the bulls need to do. We need to gap up over these highs to continue the rally. It's also positive the highs have been tested so often. Eventually you're going to break through these highs. But on the other hand, it's quite negative. We hit a new all-time high and closed red. That is never good. We should have gotten more downside than we did from yesterday's pattern. It's a pretty reliable indicator more lows are coming. The put call is at an extreme we haven't seen for months, indicating the usually wrong option players are buying a lot of calls in relation to puts. We have a 3 days tight pattern, and yesterday was either a big move or a close little change and a big move tomorrow. So each of these things indicate this consolidation should end tomorrow and we should get a big move. Most likely a gap and fast move outside today's range. I think it'll be clear by the early trade, if not before they open, the direction of the move. Bulls need to clear these highs promptly, ideally by gapping over them. And if they don't, longer term we're still positive, but if we can't gap over this, shorter term there could be a sizable drop here. We'll have to see how we open Today's action is not positive, but it all gets erased. If we gap up because tomorrow's open, we can substitute for today's close, and that's today's call.